What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we are speaking about what is potentially the most exciting industry in the stock market. Wait, we're not speaking about airlines? Never mind, actually, today's video is about bank stocks. Banks are not the most exciting topic in the whole wide world, but I'm going to try make it somewhat entertaining at least. If you follow the channel, you will know that I am a fan of Wells Fargo. They are actually the fourth biggest position in my portfolio as of right now, and I can say that I do plan on adding more to that position. So we are going to be speaking about bank stocks in general today, but mainly I'm going to be speaking about Wells Fargo, and we'll just have a little sprinkle of a few other bank stocks or even asset management companies in general thrown into the mix. The very first thing I want to speak about today is how do banks make money? Because without understanding this, it's hard to understand how long we can expect the recovery to be. And the main way that banks make money is off of interest. The bank take the money that you put into your savings account and they give it to somebody else and they charge them interest, and that is the bank's money. Say for example, you put $10,000 into a Wells Fargo saving account and they pay you back 0.01% per year. They take that $10,000 and they're going to give it to somebody who's looking for a mortgage. And on that mortgage, they could be charging as much as 3.2% yearly interest. So they're only paying you 0.01%. They are getting paid 3.2% every single year for your hard-earned money. That's the way the banks make a lot of their money, is on interest. Banks need people to be taking out loans in order to make money. Now, there is obviously more ways they make money. You know, there's quarterly fees for having your account open, there's late payment fees, ATM withdrawal fees, but the main thing is the interest. So with that very basic thought in mind, we're going to go over to a Wells Fargo stock chart and see what happened during the Great Recession, because I'm sure you're all aware back then people didn't have a lot of money. People couldn't afford to take out loans, there was no mortgages, and we'll see just how heavily the bank stocks, Wells Fargo in particular, got hit, and what the recovery looked like when people could afford to take out their loans again. And right before we do that, can I ask you to please smash the video a like? It would help me out so much. We're on the road to 10,000 subs, baby. So as well, if you're new around here, please smash that subscribe button. And drop me a comment down below. Let me know your thoughts on bank stocks. If you own any, if you're planning on getting into any, just what you think, because I know a lot of people have strong opinions on them. So with that being said, let's get straight to the Wells Fargo chart. So guys, starting it off with the Wells Fargo stock chart, okay? And I'm just showing you that going into the Great Recession, the stock price was going up and up, and we can see it dropped big time. I mean, from highs to lows, from nearly $40 a share all the way down very briefly to about $8 a share. So I mean, they dropped very close to 80% in value in that short a period of a time. But guys, the recovery, once times got good again, once we got out of the Great Recession, once people had their jobs back, once people were working again, once people could afford to take out loans, the recovery was absolutely incredible. Wells Fargo briefly reached highs of over $65. They went up over 700% in less than 10 years. So when times are going bad, they go very bad for bank stocks, and it's easy to understand why. Their whole business relies on people having money to spend. It at least relies on people who have enough money on hand to borrow money. So in a time like this, where you know people are out of work, people are living off their stimulus check, people don't have a lot of money, nobody's going out looking for a mortgage right now. It makes no sense. So obviously they've fallen on very difficult times. So the question to me becomes, do I ultimately believe that they will make it out of this on top? Could I potentially see more all-time highs being hit in the next 5 to 10 years? What will it take to get there? And ultimately, can Wells Fargo survive bankruptcy? On the topic of bankruptcy, we'll go straight onto the balance sheet, whatever now, but I mean, if they were able to survive the Great Recession, okay, which literally lasted years, they're going to be able to survive this, I'll put it that way. From all-time highs, Wells Fargo is still down over 50%. From recent highs in the last year or so, they're still down very close to 50%. So these guys are still down in value an awful lot. So a little look at the balance sheet. We won't go too in depth, but there is a few particular points I want to show you. Cash and equivalents, 237 billion, and then total investments are at 573 billion. Net loans, 998 billion. And their current assets are just shy of 2 trillion. So quite clearly, massive amount of assets, and that is expected with a bank. Their total liabilities are at 1,798 billion, so massive liabilities as well. And then their total equity is at 183 billion, leaving their total liabilities and equity at 1,981 billion. So assets and liabilities are very close to just cancelling each other out as of right now. Back in 2008, they had 1.3 trillion in assets, compared to our now very close to 2 trillion. And their net income for the year of 2008 was a 67% move downwards from their net income in 2007. A few points from Wells Fargo's Q1 earnings that I want to go through quickly. They're increasing how well their online payment system works. They've seen a 52% increase in dollar volume of mobile deposits in March 2020 versus March 2019. They're providing significant credit to our clients, so this is important. In the month of March alone, our commercial customers utilized over $80 billion of their loan commitments, and we're providing accommodations for clients that need. Through April 10th, we helped more than 1.3 million consumers and small business customers by deferring payments and waiving fees. They deferred over 1 million payments, representing almost 2.8 billion of principal and interest payments, and provided over 900,000 fee waivers exceeding 30 million. So this is a good thing for them to be doing, obviously, but it will affect them in the short term, and that is a big reason of why the share price has continued to go down. It is worth keeping in mind though that we are up over 25% from the absolute lows, and we were up as high as nearly 50% from the absolute lows. And my position in Wells Fargo is down about 15% so far, so I am actually very happy with my cost basis, because to me Wells Fargo is a growth stock. It is a relatively high risk growth stock, but we will get into that more later. Through April 10th, they received more than 370,000 indications of interest from our customers. They're working with industry groups and the US Treasury in preparation to distribute millions of economic impact payments to Americans as quickly as possible. What's important is that everything the Fed are doing to try and keep the economy alive is directly going to affect the banks staying alive and how fast the banks can begin to recover. And I mean, we all know what the Fed are doing right now. I spoke about it a lot in my last video. Next up, I want to speak about two absolutely amazing investors who currently own massive positions in bank stocks. And I also want to speak about this: why is Buffett selling bank stocks if he loves the industry so much? Because this is something that gets brought up a lot in the comment section. So in regards to Warren Buffett, in regards to Berkshire Hathaway, Wells Fargo is currently their 6th biggest position. They currently hold an 8.4% stake in the company. And then we have Leon Cooperman, an absolutely amazing investor as well, and he just recently went ahead and purchased 180,000 shares in JPMorgan Chase & Co. Now I know that's not Wells Fargo, but it is a bank stock, and they are all to an extent intertwined. So why is Buffett selling bank stocks if he loves the industry so much? The first quarter of 2019, he sold loads of Wells Fargo, 55 million shares. He dumped 2.2 million shares of Bank of America. This year he sold some BNY, and this year he sold US Bancorp. A big reason why: if they maintain a greater than 10% stake in a publicly traded bank, it could be classified as a bank holding company. This 10% threshold is often viewed as a line in the sand whereby Berkshire Hathaway is perceived to exercise control over a bank. He just wants to keep his positions below 10%. Now, some people will bring up the argument, but what about with the airline stocks when we all thought he was trimming positions to get below 10%? Buffett has had a shaky history with airline stocks for a very long time. He doesn't have a shaky history with banks. If he was to sell all of his bank stocks, that would be absolutely insane, and I could not see that happening for a second. Prior to the Rona virus wreaking havoc on the US economy, businesses were largely booming for big banks. Last summer, most banks were approved by the Federal Reserve to return record amounts of capital to shareholders through bigger dividends and juiced up stock buybacks. So these stock buybacks, okay, these are important, and these are a lot of the reason why Warren Buffett has had to sell his stocks. It's these buybacks that necessitated Buffett and his team to pare down his stake in US Bancorp, Bank of New York Mellon, and Bank of America recently. Even if Berkshire wasn't buying additional shares of these bank stocks, their steadily declining outstanding share count due to aggressive buyback policies would have been enough to put Buffett's company above the 10% ownership threshold. So banks are known for their share buybacks, they're known for their big dividends. The buybacks in particular are a big reason that Buffett has had to sell to stay below that 10% threshold. So you're all probably aware of the fact that Wells Fargo had a fake account scandal, and Wells Fargo was forced to pay $3 billion because of this. And an interviewer asked Buffett whether he slashed his stake in Wells Fargo because of the account scandal, and this is important. He said no, not specifically, he said, breaking into a knowing smile. I'm not recommending, people have to make up their own minds. In my eyes, he's a very smart man. He just wanted to trim that position, get below that 10% threshold. I think what's important to know in regards to this scandal, okay, is it wasn't management's fault. It wasn't the CEO's fault. It was the employees who were doing this. Simply put, employees had targets to hit. They couldn't hit them, so they decided to cheat and start opening up new fake accounts in people's names. This was a horrible idea from the very beginning, but it obviously snowballed out of control. Once they cheated once, they made these fake accounts once, they had to keep doing it again and again, or else ultimately they would have got caught. But they've gotten caught anyway. Look guys, it's out in the air now. It is known that this was a thing. And in the process of all of this going on, Wells Fargo did reach all-time highs. I know it's not a good thing. I know it is a big deal, but I don't think it's as big of a deal as a lot of people have made it out to be. It's one of those scenarios I've been speaking about recently, where somebody can take a piece of information and enlarge it and make the most out of it if it is to defend their point. So if somebody's bearish on Wells Fargo, they're going to bring this point up every single time and make it seem like it's the end of the world. But to me, I really don't think it is. Before my closing thoughts, there's one more article we'll go through quickly just to reiterate a few points. Wells Fargo's valuation gives investors a rare opportunity. Buying the shares of a downtrodden but historically solid companies isn't easy. However, it's a foundational habit of value investors. We want to buy at the bottom. Wells Fargo is down but not necessarily out. Clear-headed traders can view its current situation as an opportunity rather than as a source of distress, and I think that just sums everything up very nicely. And I went through this earlier on, but don't forget what happened after the market bottomed out in 2009. Wells Fargo stock began a multi-year stock price ascent, and it was massive. Wells Fargo isn't alone. All mega banks are in the same boat now. Investors should realize that Wells Fargo is big enough to withstand this type of crisis, and that it's firming up its reserves so that it can do so. The company will have to put a whole lot of money aside for this purpose. In Q1, they increased their loan loss provisions to 3.8 billion, and it will further bolster its reserves in Q2. This has already been priced into the market, so it would probably take another shock to send Wells Fargo stock price down another 8% or more. Unless that happens, investors should calm down and walk the share price back up. And that is exactly how I feel, and that's why I have dollar cost averaged my way down with these guys. There was a stage I was down over 40ish% in this company. I bought them very early on, but dollar cost average down. Now we're down 15%, and they're still at a price where I am happy to buy more. In short, just relax and let the worry wash over you like a warm summer breeze. That's beautiful. This too shall pass, and the recovery of Wells Fargo does not have to be V-shaped as long as it happens at some point. I think this is something very important to understand. People look at the S&P 500 and we see the V-shaped recovery happening. We've already approached all-time highs again. We're not too far off of them by any means whatsoever given all the circumstances we're in. Then we look at Wells Fargo and there's no sort of a real recovery happening just yet. But that to me is what's really good. You have to understand the recovery here will take a little bit longer than your average company. It's going to take longer than something like Facebook. You know, Wells Fargo needs the economy in a decent place to make considerable money. To me, it just makes sense right now. This is a long-term investment for me, okay? If you're going to need this money in the next year or two, maybe 3 years, maybe even 4 years, might not be the best idea. But if you're willing to hold on to these guys for 10 plus years, I think this price makes an awful lot of sense. Essentially, if you're a value investor, I think this is a fantastic opportunity. So guys, there you have it, my thoughts and opinions on Wells Fargo. And a lot of what I said today goes for other bank stocks too. The reason I really love Wells Fargo is because they have been hit considerably harder than other stocks such as, JPMorgan, the other bank stock I am actually in. In my eyes, they do carry a considerable amount of risk, but nothing crazy. I think the risk to reward ratio is there, and I also think that's more important than carrying some risk. I wouldn't go put my life savings into bank companies, but I'm happy for them to have a decent percentage in my portfolio. And I definitely don't think they're super high risk. I don't think they're going bankrupt. I don't think if you buy at this price you're going to lose 50+%. That is not something I see happening. If it does, something crazy is going to happen in the world. You will have bigger concerns than the money you've lost in this company. So I hope that you guys did enjoy today's video. If you did, again, please smash a like, subscribe if you're new around here. We're trying to get to that 10,000 baby, and please drop me a comment down below with your thoughts. I appreciate you all so much. I hope you have an absolutely fantastic day. I will see you for tomorrow's video. Peace.